And we are live. Hello, everyone. Welcome to a new episode of Blockchain Talk. In today's episode, I am going to do a continuation on the subject of spot ETFs. Now, why this special dedicated episode? Well, last week, there was much ado about a listing of a Grayscale or BlackRock spot Bitcoin ETF listing. And for that, we want to make sure that you people are up to date as to what is being told in the media and what it is all about. Now, as you guys know, Grayscale, BlackRock, JP Morgan, they are all big institutional investors getting into Bitcoin. They all have, like ARK Invest is another one, have applied for a spot Bitcoin ETF with the Securities and Exchange Commission of the United States of America. Well, I'm just going to start sharing my screen. I'll make this up on the go. Hold on a second. Screen, there we go. Present video file. Nope. Sorry, it's been a while. There we go. So let's just head on straight into this. Now, spot Bitcoin ETFs are being seen as something bullish by most of the Bitcoin and cryptocurrency community. Why so? Well, it enables quite a lot of money flow going into Bitcoin and the cryptocurrency markets. Why? Well, quite frankly, for that, I'm going to refer towards a previous episode as being highlighted here. So, in short, I'm going to show a few tweets of mine highlighting, re-highlighting, reiterating this subject a little bit so that most of you guys who haven't seen the previous episode about the different kind of ETFs that exist are up to speed. So, for those who have seen my episode on BTC ETFs, you'll understand this was expected. Here, it's a tweet talking about institutional Bitcoin accumulation seeing exponential rise, and this is factually the previous episode I was talking about. In this episode, episode 89, it has been taken a few months ago. I was talking about the listing of a spot ETF. Now, what do you guys need to know about a spot Bitcoin ETF? Well, ETF stands for Exchange Traded Fund. It is a paper asset. It is a certain IOU. Now, what's the difference between the various ETFs that exist and what makes a spot ETF so important? Well, with various other ETFs, not talking about spot ETFs here, there is a basket of assets backing the ETF. Depending on the ETF, be it a future, be it another type, that basket of assets is actually simulating the value of a certain asset without really holding the asset itself. Say, for example, there exists a gold future ETF. It implies that the institutional investor doesn't necessarily hold gold within its asset portfolio, but it has a variety of other assets like US dollars, variety of loans, a variety of stocks, etc., in order to simulate the value of gold. And now with a future ETF, it allows for traders to make a guess on the future value of gold. And such thing also exists for Bitcoin. Now, the difference here is with a spot ETF, the Bitcoin spot ETF, is that the institutional investor is going to hold the actual asset itself, preferably on a one-on-one basis. Meaning that if Grayscale and JP Morgan and BlackRock have their spot Bitcoin ETFs approved, that would imply that they need Bitcoin reserves within their asset portfolio in order to sell off and distribute their various ETFs. Now, some of you more wiser viewers might have noticed that I was talking about IOUs and paper assets. By reason, well, a Bitcoin spot ETF implies that the actual Bitcoin is being held by the institutional investor. Institutional investment firm. I need to be correct here. And that people trading the ETF do not really hold the Bitcoin itself. They are trading paper Bitcoin. So be wary about that. Myself, I'm not too much of a fan where it concerns ETFs in any size or form. Anyway, so if you want to have a deep dive in the different Bitcoin ETFs which exist, I'm going to say watch the previous episode, episode 89 of Blockchain Talk, wherein I laid all down. So as I said here, for those who have seen my episode on Bitcoin ETFs will understand this was expected. A spot ETF implies backing by physical Bitcoin. We are talking about, sorry, that's some publicity here, about this here institutional Bitcoin accumulation seeing exponential increases. Now, this is an article from earlier this year, July 3rd. However, still ongoing, but more on that later. Now, the SEC, if you guys are following the news, we know that their relationship with crypto and approving spot ETFs, it isn't really going all too well, as I've highlighted in this tweet here. SEC has delayed the approval of Katie Wood's ARK21's investment Bitcoin spot ETF. SEC will keep on delaying the Bitcoin spot ETFs for as long as possible. I still stick to that statement. We shall see a first come, not first served approval rate, keeping an eye out which and whom spot ETF will be approved first. Now, quoted here is a little overview of the various companies who have applied for a spot Bitcoin ETF. And what do we see here? We see Grayscale, 21 shares in ARK, BlackRock, Bitwise, Van Eck, Wisdom Tree, Invesco and Galaxy, Fidelity, Valkyrie, Global X, Hashdex, and Franklin. There's also a few spot ETFs going on. Now you see there's a few highlights here. To give a quick update, I didn't immediately find an updated list here. This is from the end of September, so about a month ago, approximately. And you could see second deadline, a few were overboard and some were refused. Now, in the meantime, some of the applications have been updated. If you have been following Bitcoin spot ETF news the last couple of weeks, you will know that a variety of them, like Grayscale, like BlackRock, like ARK Investment, have been updating their applications for the Bitcoin spot ETFs to include a variety of parameters where it gave a few waves within the community. Most had to do with Bitcoin mining, and naturally it's not so green, how to say, view and energy usage. Naturally, if you follow me, you will know that I frequently quote Daniel Batten, and myself, I have been quite critical about the numbers proposed and have been actually debunking about the not so green side of Bitcoin. Mostly I'm talking about dual purpose mining, but I'm also highlighting a variety of articles and projects even whereby Bitcoin is being mined through, well, renewable farms, etc., etc. So yeah, now what is important here are the deadlines. As you guys can see here, 1910, 1710, these dates have all passed and all have been moved. We're the 1st of November. As you guys can see, third deadline, everything is being moved towards next year. Now, there are people who will be mentioning and even stating, yeah, it will be by the end of this year. Now, let me reassure you, I'm more confident that it will come by next year. Is it going to be January? Not quite sure. I'm more convinced of the final deadlines before the approval, and even then, I'm quite sure they will find reasons to prolong the approvals. It's a fact. Now, notwithstanding the reasons why they would delay it so long to approve the Bitcoin spot ETF, there's a little anecdote here I want to highlight. And as you guys can see, we shall see a first come, not first served approval rate, meaning that it would depend on who the issuer is, who's got the most money that can push the approval first. And now, currently, all eyes are on either Grayscale, as you guys can see here, file date and first deadline. Grayscale has been, well, going on for quite a long time and didn't reach its approval yet. Now all eyes are on the iShares Bitcoin from BlackRock, and in part that of Fidelity and ARK Investment. Those three are head ones, the head issuers. As soon as one of those three has been granted approval, can rest assured the others will follow. It also means that billions of dollars can, well, trickle down within the Bitcoin network in sales and a variety of exchanges. Why am I focusing on BlackRock? Well, BlackRock is one of the biggest institutional investors in the US, and it has, as you can see in this article, quite a lot of trading support with heavyweights like Jane Street, Jump, and Virto. I'm highlighting this article here because it's quite recent, and at the same time, well, does it underline the importance of what is going on? Yeah, sorry, I've got two cats here and they're demanding my attention. So a little overview of the article here. Some of the world's largest market-making firms are in a mix to potentially provide liquidity for BlackRock's eagerly awaited Bitcoin ETF if regulators approve the product. According to a person with knowledge of the matter, trading giants like Jane Street, Virtu Financial, Jump Trading, and Hudson River Trading have held talks with BlackRock about a market-making role, according to a BlackRock slide deck reviewed by a person familiar with the matter. So it keeps on being vague, but the big takeaway here is worldwide eyes are on BlackRock in a wait for the approval of their Bitcoin spot ETF. Now, this is something quite important. Now, as I said here in this little tweet here, I'm going to requote it, reshow it here on screen. Those who have seen my episode will understand it was expected. Spot ETF implies backing by a physical Bitcoin and refers to this article. Accumulation sees exponential increase. This was July 3rd. And we are indeed seeing new Bitcoin whales appearing. And this is an article from August 23, about a month, 2 months later than the institutional investor article that I've just shown. And they say, look, there's a mysterious Bitcoin address which has accrued more than 100,000 Bitcoin. Naturally, as you guys know, and as I have explained in earlier in this video, for a spot Bitcoin ETF, you will need to back the ETF one-on-one with the actual asset itself. So BlackRock is in full preparation mode, and BlackRock isn't going to be the only one doing so. Still have Grayscale, though Grayscale still has its old Bitcoin, and well, its application form has more to do with switching or using that Bitcoin within their reserves as a collateral to create their spot ETF. Now, for ARK investment, in ARK 21 investment, sorry, from Katie Wood. In any case, they too have been accruing quite a lot of Bitcoin. BlackRock is simply following suit. So it becomes important to validate and verify the various addresses. And here we go. Once again, showing you guys the power of, well, a blockchain explorer. You guys can see here, these are the metrics from the wallet we are talking about, which has been accruing over 100,000 Bitcoin. You can even see here when it occurred, started in May, and is still going strong here. Even so, quite recently, by the end of October, we see some value has been added. Oh, sorry, that's the pump. Wrong thing here. Balance remains positive, but you guys can see the last one accrued here was in July. My bad, my mistake. However, Blockchain Explorer doesn't lie. Sometimes you need to pay a little bit attention. They say 100,000. Currently, we are at 118,000 Bitcoin that they are holding. All saved here. So, yeah. Keep an eye out on this address. This is probably in the future going to be flagged as one of BlackRock's. Close it down. Now, something else. As you guys know, BlackRock is a big institutional investor. They do not only invest in Bitcoin itself, they will also be investing in the means of acquiring Bitcoin, which means in mining firms. This is exactly what this article is talking about. BlackRock has invested in 4 of the 5 largest Bitcoin mining firms. The article is slightly wrong here in the title. Who are those firms? Well, I did a little bit of a debunk. By reason, those mining firms, well, they're quite big in the US. They're one of the biggest mining farms and companies in the US. However, with that said, a new myth is arising, and I saw it pop up on Twitter and a variety of social media already, or by people who are talking and saying, look, BlackRock now has acquired the means, due to being a shareholder in those 4 mining companies, to actively push changes onto the Bitcoin network. They have the hash rate. And I'm going to be honest, that's not entirely true. I've been actively debunking it here. Is one of the persons I replied to, where I said, that's Kyle X, who said Bitcoin isn't decentralized, and he's quoting 4 of the 5 firms being mentioned in this article. And I said, look, BlackRock might be a major shareholder in those 4 companies, but these are but 4 mining companies among the many more that exist worldwide. People seem to forget that the United States isn't the entire world. The entire world is much bigger. Bitcoin has a global supported network. Many more mining companies exist. There exist even solo miners supporting the network on their own, who don't have big farms, who aren't a company. So that's something people seem to forget. Now, here's my little debunk. And here I said, look, just for shits and giggles, let's do the math. Total current Bitcoin hash rate is about 481,000 ether hashes a second. It's a big number. Now, BTB, Wolf, Ken, and Kiefer are the companies that BlackRock has a vested interest in, is a major stockholder in. Together, I did some research. You can see the articles here. Paraphrased, I'm going to say these are the hash rates at maximum these companies are putting out. Some even are projected hash rates, meaning they aren't factually so. If I'm not mistaken, it was the case for Wolf, even the case for Cipher, right? See these numbers, see the total hash rate. Grand total for BlackRock is about 21.1 ETH a second. That's an influence of about 4.38% of the total hash rate on the entire Bitcoin network. That's not the majority. If you want to attack the Bitcoin network, well, we talk about a 51% attack. You need more than half the total hash rate of the network in order to push changes through unilaterally. They're not there. They will need to buy up practically each and every miner and mining company in order to get there. And even then. So with that, a little bit of debunking, but an important giveaway here that I want to highlight where it concerns this article and their investments in Bitcoin mining firms is that it's something for investors, retail, corporate, etc. It is something which needs to be followed. Bitcoin mining is going to be lucrative. Investing in stocks for Bitcoin mining companies is something quite interesting. BlackRock did not become a multi-billion investment company without reason. They have smart minds. And yes, they might be dealing in some shady BS. I believe I've got another tweet here. Services offered. No, I didn't quote it. Anyway, what I do want to highlight is that BlackRock, during the COVID pandemic, there was some outcry on Twitter that they were buying up quite a lot of houses, family units in the US, well, over the entirety of the US, and made it almost impossible for retail, for people like you and me, to buy their own homes. BlackRock still got them all because they're a multi-billion company. And they themselves will put those houses up for rent, meaning there was some unfair business going on. But due to their size and the money involved, well, things pass through. Now, you can expect with a spot ETF that they will try to leverage the cryptocurrency market. However, they might have noticed how well secured the Bitcoin network is and will be trying to find other means to leverage money out of Bitcoin or out of the cryptocurrency market through their Bitcoin spot ETFs. So be not surprised in the future that we will be seeing some of those other institutional investors like ARK Invest or even Grayscale attempting to leverage the market during the upcoming bull run of 2025. Do watch out. And with that, I want to repeat one important aspect. One important aspect that I've been repeating across all my platforms and across all my live streams. Self-custody. Only hold the real deal yourself. Do not trade in paper Bitcoin. That is a fundamental thing you guys need to understand and adhere to. Take a brief look at Solana. What was this? Yeah, so variety of Bitcoin services. Now, I want you to look at the date here. Now, some people will think that BlackRock's involvement with the Bitcoin network is something recently and quite new. No, I want to highlight with this one that they have been contemplating and playing with offering Bitcoin services since 2022. That's the oldest that I could find within my own tweets, though I know Twitter sometimes doesn't show all results. I know for a fact since 2020 or 2021, they have been playing with Bitcoin in a variety of ways. I don't want to say future ETFs, but a variety of services, looking into a variety of crypto-based companies and Bitcoin-based companies themselves. So do watch out. Now, this is naturally an article, and it's going to be lost article showing because I want to share with you guys another important aspect where it concerns all these institutional investors onboarding, getting on board within the cryptocurrency market, getting into Bitcoin. It has to do with this. So institutional Bitcoin accumulation sees exponential increase report, uptick in institutional BTC holdings. That we know, as I've mentioned, I believe it was this one here, the wallet that I've shown you with more than 100,000 BTC linked to BlackRock. We know about Grayscale still having their Bitcoin reserves, which they are trying to change into their spot ETFs, etc., etc. We know about ARK and 21 investments from Katie Wood holding Bitcoin, etc. We know, and that's a little bit the danger what concerns the spot ETF. We are creating new super whales within Bitcoin. Now, fundamental aspect which gave rise to the success of Bitcoin has to do with its decentralization and wide distribution. And I made a dedicated post here, and some of you guys might have seen it multiple times. It is dated from April of this year, where I was highlighting MicroStrategy's recent acquirement of a new Bitcoin, quite level few million that they invested. In the meantime, they have done more so. But as you guys can see, the article, bull market everything is half my mainstream when right post, yada 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 yada. And what I'm basically saying here has to do with the creation of whales. And that whales generally, currently are being seen as the saviors of Bitcoin, because with all that spot Bitcoin ETF hype going on, people are actively vouching for the approval. They want a spot ETF by BlackRock, by Grayscale, as they see and think number go up, because millions and billions are going to be flowing into Bitcoin as soon as the approval is there. That's correct. But we need to take a more holistic view. Who is onboarding those billions of dollars? And quite frankly, those are the quite limited players that we have seen. Where was the tweet? Here. These are the people which will be onboarding billions. This is not decentralization. These are centralized entities whom are even interconnected with each other. And that's a little bit the danger. And that's a danger I highlighted here in this article with Fear the Whales. We are creating a bunch of super whales, super holders of Bitcoin. This allows them to play the market. I mean, if you have hundreds of thousands of Bitcoin within your portfolio, you can easily play the market by selling off a few thousand, letting the price drop, getting them back on the cheap and pumping it back up. That's called leverage. That's playing the market. That's basic trading. And it becomes very dangerous if you have these kind of super whales like MicroStrategy, like Grayscale, like BlackRock, like ARK Investment. These companies want to make money. They do not give a fucking damn about the ideas upon which Bitcoin has been created. They are institutional investors. The only thing on their mind is cash flow. They want to see cash flowing. And that's a little bit the topic that I'm highlighting here in this article of Fear the Whales. Fear them by reason these kind of whales like MicroStrategy, like BlackRock, like Valkyrie, like ARK Investments, etc. and Grayscale, they want to make money, and they know about the Bitcoin cycles and the halvings, etc., etc. So they will be playing the market. They have been accumulating on the down low. They know prices will rise due to the halving that is to occur next year, that its price will increase, and they will start trading Bitcoin. They will do sell-offs, which will play the market, that it will descend, buy but see a more ascended, well, not ascended, a higher cash flow as a result. Their books will remain the same, but they will make more money. And that's a little bit the problem. We can trade as much as we want, but let's be honest. If you're trading Bitcoin, the majority of us aren't really playing with 3 to 5 Bitcoin. It's less. Most traders here, due to the current Bitcoin price, are trading between what? 1.5 up to 0.01 Bitcoin, in that range that we try to make money. These guys have hundreds of thousands. A sell-off of 1,000 Bitcoin is nothing to them. But a sell-off of 1,000 Bitcoin will result in some volatility on the market, which they can use to leverage money out of it. The bigger their bags, the bigger these whales are, the more leverage they will have over the Bitcoin markets. Luckily, not over the network. Whereas the network is luckily being secured by independent miners and a variety of mining companies. But if you're holding Bitcoin for its future value, and if you're an active trader, and that's one of the reasons that you are in cryptocurrency, be well damned to fear those whales, because that's what is going to occur. And there might be naysayers and say, yeah, no, with the spot ETFs, it's one-on-one, etc. True. But they haven't mentioned how many ETFs are going to be issued. They might now have 100,000 Bitcoin in their assets, but the ETFs themselves, how many are there going to be? Because you can fractionalize them. And might be the case that they just need 50,000 Bitcoin held in reserves for all the ETFs that they are going to issue. But the other 50,000, well, they can play the markets with it, make their ETFs more valuable, let them decrease, etc. That's a little thing, a little play here that needs to be, well, a little play, a little fact, an inconvenient fact you guys need to understand. Always look at the numbers and what is not being said. Look behind the curtains, because dirty games are going to be played here. And naturally, I'm very happy that there is now heightened interest by institutional investors in Bitcoin and the cryptocurrency market, as it shows that mainstream adoption is occurring. We're now at the stage that mainstream finance is picking up on it, but that's the dangerous spot. Mainstream finance isn't as kosher as it should be. They've got the big money and they know the tricks, that everything is legal, but not necessarily fair. Do watch out. And with that, I'm going to end this little live stream. I'm going to remove sharing screen. As I see that there's no questions remaining here, I'm going to say thank you guys for watching. I know it was a short episode. If you have questions where it concerns Bitcoin or a variety of other cryptocurrency, I'm all ears. I'm here to investigate, help you guys out with basic educational lessons concerning Bitcoin and crypto. I'm doing this all for free. If you want to support me, subscribe to my channel, leave comments, give it a like, etc., etc. With that, I'm going to say thank you guys for watching, and up until next time. Bye.